Ladies and gentlemen, Tamir from Fibonaccis-Traders here, and we're back with a jam-packed day of SOFI updates, all condensed into one video for you. Let's dive right into the first piece of news. Today, SOFI hit a major milestone: 10 million members. That's right, 10 million members officially getting their finances on track with SOFI. Assuming this milestone was reached on the reporting date, we now know their exact membership count and how much more they need to achieve their year-end targets. Over the 78 days of this quarter, SOFI has added approximately 637,000 new members, or about 8,041 per day. With 14 days left in the quarter, they're on track to bring in roughly 740,000 new members by the end of Q4 2024, assuming the same growth continues. Comparing this to past quarters, this number could break records. If churn is factored in, this would still be SOFI's highest net member growth. The previous record, set in Q3 2023 at 777,000 members, might be surpassed, which is incredibly exciting for the company. Now, whether this level of growth can be sustained through the holiday season is up for speculation. While advertising efforts may not be heavily focused during this period, the growth trajectory has already exceeded expectations. I had hoped for 10 million members by year end, and we've achieved this milestone with time to spare. Truly a reason to celebrate. Moving on, let's discuss the upcoming rate decision. Tomorrow, markets are pricing in a 95.4% chance of a 25 basis point rate cut, amounting to a total of 100 basis points in cuts for 2024. This exceeds SOFI's projected 75 basis point cut. While I'm not making any trades based on this, some institutions might be, particularly in the loan market. If rates drop, institutions may purchase SOFI's higher rate loans, boosting SOFI's loan sales, a key revenue driver, as lending still accounts for over 50% of their income. Next up, let's talk about Anthony Noto's recent loan agreement. Contrary to rumors, this wasn't a sale of 2 million shares, but a loan agreement with Goldman Sachs. The maturity date is set for February 7, 2028. The settlement terms are structured with floor and cap levels, providing downside protection at 1360 and a cap at 3075. This shows Goldman's confidence in SOFI's long-term value, as they wouldn't enter such an agreement if they believed the stock was headed for failure. This loan also provides Anthony Noto with liquidity without triggering taxable events. The agreement includes the option for a cash settlement, meaning no shares may need to be sold at all. This is a strategic tax planning move to manage upcoming obligations tied to performance-based stock units. It's a sophisticated strategy that highlights confidence in SOFI's future. Let's move on to another topic that's raising questions: insider sales. Recent data aggregators are reporting what looks like a wave of insider sales at SOFI, creating unnecessary panic. While it's true that shares have been sold, these transactions are tied to tax obligations from vested equity awards. Insiders are receiving far more equity than what is being sold, with the sales covering only the taxes on those awards. This is completely normal for officers receiving stock-based compensation, and it's not indicative of any underlying issues with the company. To summarize, these sales are procedural and expected. There's no cause for alarm, and the fundamentals of SOFI remain strong. That's it for today's updates. If you found this helpful, don't forget to subscribe for more SOFI insights. Thanks for watching, and see you in the next video.